We've had those PMI readings this morning. Is that how you're sort of looking at it? Weaker numbers really underscores that need we have for stimulus.
Yes, we have to say that if you look at the data, you will feel that the economy is still bad. But what happened in the last week, because the sentiment of the market had a U-turn, right? But still, if you look at the data, it raises a question. Well, people have been asking since last week. Many of my friends were asking me. Yes, we saw the boom in the equity market, and we saw the stimulus delivered. But what do you think about the real economy?
Yeah,
it's still in some question because if you see the equity market, people are very confident, are very happy, and excited. But if you look at the real economy, still the question is, and whether and to what extent the stimulus can help the economy.
Yeah. What do you make of it, Shuli? I mean, is this the whatever it takes moment that we're seeing from China now?
I perhaps wouldn't go so far because if you look at the recent announcements, they're still doing the Chinese traditional medicine way, like increase the dosage a little bit and adjusting the dosage. But I think this time is a little bit different because the rhetoric has changed, right? Like you just feel like from the recent press releases, etc., that the government seems to be less out of touch and better informed, and they seem to have realized why past policies have not worked. For instance, economists have been talking about the second wave of shocks in China, in that local governments, which in the past served as major helping hand, are sitting idle this year. In fact, the fiscal strength is even less than 2022 or 2023's. So you see that in the Politburo readout, the first thing is fiscal stimulus, front and center. So I think the sentiment, the top seems to have figured out what's really ailing China, and that's a good first step.
David, do you agree with that? Because I think to your point, I mean, most Chinese are not holders of equities anyway. So even though you have that exuberance, it doesn't really impact the everyday person. Do you think, to Shuli's point, that these measures are more targeted, they could actually reach the everyday person? Will we see that?
Well, I don't think we don't have a clear definition on the everyday person. But I think, yes, starting from the equity market is a good way because it costs less money for the government to boost the confidence. So if we have a start, the equity market could be a good choice. Another choice is to boost the housing market, but it would cost much more to boost the whole economy or via the housing market. So if you look at this, yes, maybe.
What do you look for next now, David? We just had Robin Shing from Morgan Stanley on saying, look for late October, this MPC Standing Committee meeting, where we might see some follow through when it comes to fiscal measures. Is that going to be the next sort of catalyst, you think?
Well, based on my past experience, I would have to say that, yes, we may see some fiscal stimulus on the way, but maybe it could be weaker than what people have been expecting over the past week, because in the last week we have seen several, rumors or talks in the market about how the size of the fiscal stimulus, blah blah. But based on my experience, I would say probably it would be smaller than expected.
Shuli, how does that stack up with what you're hearing? Because one of the things that has impressed you is the fiscal power of what we've had so far.
Yes. So people are hoping that at least there should be some kind of a fiscal reform, right? The central government has a lot more money, and the local government, the land sales, we know land sales revenue is gone. So there has to be some form of a fiscal reform. But going back to the equity market, I think like what David was saying, like it's a cost-effective way to stimulate the economy, because we all know local government is not doing anything, and the government needs to make private enterprises feel more bullish so that they can invest and hire tens of millions of fresh college graduates. And having a bullish stock market helps, right? Like if you are a chairman of a company and you say, oh, my stock is up, then I might actually have confidence in the economy and might invest again. So I do feel that this is a more cost-effective way to stimulate the economy.
What are your sources? What are people telling you right now, Shuli? Is this something, what we're seeing in the market, something that's just technical? Are they starting to look at re-rating and saying that, policymakers are really serious about these structural issues now in the economy?
I heard some very interesting comments. Some people have compared the last few days of change to China's abrupt exit of COVID-0. Yes. Let's remember that, right? Like they will say, oh, China, the Communist Party has a history of sharp U-turns. They will hit the wall and then they will turn around. So that's the bullish side. And on the other hand, some people are very cautious, right? Once bitten, twice shy. Like China has been stimulating the economy for 3 years. Property market cooler than ever. Youth unemployment at record high again. So there are two sides. But I do think the comparison to the exit of COVID-0 is interesting.
David, I want to end with a final thought from you on that fiscal side. If we are going to be left a little bit disappointed, when is that disappointment going to set in, do you think?
Mainly the size. Well, when we talk about disappointed, actually today, yesterday's policy about the housing market was also some kind of disappointing. Maybe for a foreigner outside China, you would think, oh, China is loosening the home purchase limit restriction, right? You think everything is good. But if you look at what people were expecting, that is more than the actual policy. People were talking about the fully removal of the purchasing restriction in all of the Tier 1 cities.
We're just talking about Guangzhou now, right?
Yes,
yeah.
But it's only Guangzhou removed all. But for Beijing, Shanghai, and Shenzhen, they all kept some of the restrictions. So I think similarly for the fiscal side.